Switching gears now, we're going to look at the stock market. Joining us now is Taylor Riggs, co-host of the Big Money Show, right here on Fox Business, my favorite show. Hi, Taylor.
Hey,
Thanks
Larry.
for doing that.
You're my favorite show. Look at that.
Is this rally for real? It's a good rally, all right? So going back to last October or so, up almost 25%. What do you think?
We're in a good bull market, right? So you're up from those October lows you mentioned. Bank of America, interesting statistic. Once you get a confirmed bull market, 92% chance in the next 12 months you still get higher returns the year after.
Whoa.
My only concern is we talk about the Magnificent Seven. All that is sort of the top big tech stocks. You know it. NVIDIA's now in that list, but traditionally it's Microsoft, it's Amazon.
Jim Cramer named his dog NVIDIA. My old partner, Jim Cramer, who I love, by the way, but he did. I hope he owns the stock.
Very good. Fun facts always come from you. But the problem is those sort of big tech stocks have been leading this rally. I really want to see a little bit more breadth to this rally to make sure it's a healthy one instead of just being led by all the big tech stocks. So I want a little bit more confirmation from some of, let's call it the equal weight index as opposed to just the market cap leaders.
Right. This is a point. One of our experts made the same point that on a non-weighted basis.
Yes.
Actually, it's only been a small rally, not a big rally. But I do want to raise this point. The S&P index, the home builders index, up 35%, Taylor, year to date.
Yep.
The S&P retailers index, up 23% year to date. I don't think retail sales are doing much of anything. In fact, the Atlanta Fed GDP tracker was marked down today, only 1.8% after retail sales. However, Taylor, the chips index, stocks are up 46%. The Dow Transport's up 11%. I'm just saying, I don't know
That's fair.
I mean, there may be more going on.
Well, there are some good pockets. I think it's nice that you mentioned housing. We got the Fed meeting this week. We finally got the long-awaited pause, maybe a skip, maybe a jump. We'll find out. But I think a lot of when you especially think about home builders that are so cyclically tied to rising interest rates, once we get that pause, it's sort of a signal that maybe housing is okay. Now, there are certainly some pockets where housing has not been okay, but I think overall it's actually been improving. And I think a lot of us would have thought if you talked to me a year ago when the Fed was at 0, now the Fed's at 5, housing would be in a massive recession. And frankly, we're actually not quite there. So I feel like things have been holding up a little bit better than we would have thought.
All right. Now, one area that's not holding up, we're going to have some fun here.
Okay.
But it's not holding up very well is woke. Okay. We have a chart of all these woke companies. Let's put that up on the full screen if we can. Put it up. Yep. There it is. I don't know. I can't actually see it. Maybe you can see it.
Yes.
But Target down.
Yes.
Disney down. What else is up there? I can't see.
Anheuser-Busch is down.
Right. Getting clobbered. So the woke companies have done very badly.
What is that saying that we use on this program? You go woke, you go broke. So yes, I think some of that is the name of the game. You've certainly been seeing Anheuser-Busch. There are a lot of analysts who track, is it Molson Coors and Sam Beer? And they say that that's actually an opportunity to get in because they don't have, let's call it maybe the drama surrounding the stock that companies like Anheuser-Busch have right now. That being said, I'm curious to see sort of the next analyst call if these companies come out and say that this actually is a real trend or if things are starting to improve. How much of this is also some concerns about the consumer? I don't want to let Target and Anheuser-Busch off the hook here, but if we are going into a little bit of a slowing economic environment, if consumers, and Target's mentioned, consumers are pulling back on the fun stuff, the discretionary. We're going back to groceries and staples.
Retail sales are not doing as well as we thought. Core, basic retail sales. That's why the Atlanta Fed, they started saying GDP in Q2 would be over 3%. Now they're down to 1.8%. So we got to be careful about that. Remember, folks, you can catch Taylor, come on, with her co-host, Jackie DeAngelis, and Brian Brenberg on The Big Money Show. It's my fave. Weekdays at 1 p.m. Eastern here on Fox Business.
Feeling is mutual.
Thank you. You're terrific. Appreciate you doing this afternoon.